All right. Hey, everybody. Kat and Tucker here with our favorite, most trusted lender. Want to introduce him to you. His name is Greg Mull of the Cross Country Mortgage Lending Group of the Greg Mull team, correct?
That's right.
Yes,
Yeah.
That's right.
Good to see you this morning.
We wanted to bring him on the show,
So,
just to you guys.
Show.
To a show and talk to you about what's going on with this COVID-19 stuff. Everybody, is in a slight panic, maybe even more so now. And we wanted to talk about the mortgage lending process and with this virus, what it means for you. So Greg, I'm just going to jump into questions if that's okay.
Yeah, absolutely.
Awesome. Okay, so the first question that we're getting from a lot of buyers that we have is, we're hearing a lot of people say they want to wait to purchase a home, and there's a lot of hesitation. What are your thoughts on this, and what's your advice?
Okay, the big question right out the box, right? What's going on? First of all, we've seen a small pullback in new home purchases. Most people are going right full speed ahead. I got 5 new purchase contracts in just this last week. And I'm finding that, I think the general consensus is, and I don't mean to be an opportunist, if you will, but in adversity, you sometimes find a ton of opportunity. And a lot of people are taking that perspective. And we do know that we've got some tough times presently, but these tough times aren't going to last. Things will get better. And we think that this signifies a point in the market where you have a ton of opportunity. So my advice is, hey, certainly you need to sit down and have a big discussion with the family about what your goals are. How has that changed with the current climate? But we may see that we come through this a little sooner than later, and we're going to be off to the races once we do. I'm a believer that food, water, and shelter we're going to need no matter what. And you're either making somebody else's mortgage payment or you're making your own. That hasn't changed. So I believe in, where's the flag? I believe in America. I believe in, our resilience and our ability to pull through these times, as difficult as they might be. But I see a ton of opportunity, whether it be in the stock market or in the real estate world. And I see people really gearing up to take advantage of that opportunity right now.
Yeah, absolutely. You say opportunity. So can you go a little bit into depth of what you mean by that? Obviously, as realtors, we see opportunity because things are coming back on market. There's not as many buyers because they are on a standstill right now. But we look at that as opportunity, especially in a market like Los Angeles where things go so quickly, multiple offers. So tell me about opportunity on your side of the lending side.
Yeah. Look, prior to COVID-19, prior to the coronavirus, we were in the most robust economy that we had seen in a long while. In the real estate market, new home builds and new construction were at a 13-year high. That halted or changed a bit because of the virus. But there was nothing really else that impacted us so significantly. So with that being said, inventory levels were at a low. Demand was like at an all-time high. That hasn't changed. And we're speaking specifically about Los Angeles and Southern California. That has not changed. And I still see a ton of pent-up demand. I think a lot of people are going to sit on a few listings for the next 30, 60 days. And then I see a lot coming to the market. But if I were looking for a first-time home purchase or so, I would wonder how I could use this to my advantage right now, which means maybe there's a little less competition when I'm writing those offers. Maybe there's a little more wiggle room for the sellers to be enticed to sell to me right now if there is a bit of uncertainty on their end. A lot of times people are selling a house because they're buying a new one, right? And they want to get through that process as quickly as possible. So, I see that as opportunity, maybe to, get $5,000 or $10,000 in seller credit to help cover my closing costs.
Of course, definitely.
So simply put, we're going to recover. We always have historically, we've recovered. And it's about how long until we do recover, and some economists are saying it will be as soon as, first or second quarter next year.
Wow.
If that's the case, that's not a whole lot of time, to take advantage of maybe this lull that we're seeing right now.
Right. Okay, so then are you seeing like any changes in closing escrows? Does the bank need more time? Can you tell us about that? Or anything different?
I can, yeah. God, these are great questions, guys. Right now, we're doing a lot to accommodate this market, right? Where we're practicing social distancing. That's not just in your personal lives, but that's in business as well. Appraisals, e-signing, so you don't even have to go into an escrow company and sit with people to be able to close your loan documents. That's all being done virtually now. So we're finding a new way to conduct business, and a lot of this stuff will probably even stick around long after this is gone, because we're finding it to be so easy for the consumer. And I know personally the mileage on my truck hasn't, it's staying nice and low during these times. So I'm saving that money in gas, and I think I'll probably carry on with some of these as we move forward.
Yeah, I'm
Right.
thinking that the whole landscape's going to change because of this, real estate as a whole, because of all this e-signing stuff now.
100%. That's happening, and a lot of people are really welcoming it. I think we'll have the e-signing rolled out somewhere here in the first half of April, and we've been pushing for that for quite a few years. So silver lining, right? It's kind of coming to fruition a little sooner than later, and we're excited about that.
Absolutely. And we had heard that the appraisal format was changing. Is that, can you tell us about that?
Absolutely. Right now, Fannie and Freddie and FHA have come out and said we'll accept drive-by appraisals.
Wow.
Oh my
Yeah.
gosh.
Yeah, I haven't seen or heard much from the drive-by arena in probably 10 years.
Wow.
But it's here, and simply put, what they're saying is, hey, listen, we understand the need for privacy and not allowing strangers into your home, so to speak, and the appraisers are also wanting to, have as little interaction with people as possible during these tough times. But the drive-by appraisal, we can still get statistical values for the property. I think the caveat is they want to be able to see some interior photos on the MLS from the last 2 years. And if they can't find that, they're agreeing that once this is over, we can circle back and provide them with those interior photos. So they're giving us a lot of leeway here to be able to conduct. Yesterday, I sent out a video called "Unusually Doing Business as Usual," right? We're just finding all different ways to get the job done. And I want to circle right back to a question you had asked, which was about our escrow periods.
Yeah.
We're closing escrows just as 30 days, 15 days sometimes. We're prioritizing purchases over refinances. So we're finding a way to meet those demands. A lot of banks right now are having trouble with that. And we're certainly trying to focus all our efforts on getting people into their homes sooner than later with so many changes happening.
Absolutely. That's wonderful. And any changes to the closing or signery with the notary? I mean, that's obviously just one thing I wanted to touch on too. I mean,
yeah, and we're expecting that mid-April that they'll roll out e-signing, so you don't have to see a notary.
Wow.
You simply would do like the bio. Listen, I'm not the most tax-savvy guy in the world, but but it seems like I'm able to log into all my banking financial institutions right from the comfort of my own home always, and conduct and send wires and do all those things. So whatever it is they're going to do to verify you are who you are, they can do that virtually and allow you to sign your loan papers in the comfort of your own home to mitigate or at least embrace the social distancing that we're trying.
of course. Right. Okay, so then, we need to touch on the rates too. If you could tell us a little bit about that, because we saw obviously a big drop, then we saw a spike come back up. So can you tell us what's going on with the mortgage rates?
I'd love to. And that's probably a tougher question. And we probably need our own show, a 30-minute segment just for that.
Our show.
Right? Yeah, right. We probably we could fill prime time with just this one question. What are rates doing? What does that mean to the consumer, to the home buyer? Look, the simple answer is the influx of rates that we've seen over the last month and a half. Rates are still some of the lowest rates I've ever seen in my 21 years. I'm certainly concerned when I'm making my mortgage payment that I can afford that mortgage on a monthly basis. it's said that you write a check every month, not an interest rate, right? So I'm really concerned about my budgetary restraints, and I'm really concerned about that monthly payment. But it should be noted that rates are the best that I've seen them in 21 years. Now, in the last 30 days, what you've had happen is you've had, let's put it this way, in 12 months last year, the entire banking world in the United States did $3 trillion in business. In 10 days, from February 24th to March 5th this year, we originated over 5 trillion.
Oh my gosh.
So in 10 days, we did twice the volume that we've seen in all of 2019. Okay.
Wow.
The best way I can put that is the line outside Best Buy before Black Friday for that TV that was going on sale for $100 was more than the staff could handle. So literally, you've had banks just turn off the spigot, right? They've stopped taking loan applications, and they've raised rates to say, hey, listen, we need to catch our breath here. And then you insert coronavirus the very next week when we started to really get a feel for what this was going to impact the economy. And that really threw the market makers for a spin. And then to touch on unemployment, you've had a lot of unemployment happen, a lot of first payment defaults. You've had a lot of loan servicing companies that are going to have to carry this mortgage payment for the interim, right? All of that has weighed into some wild swings in the market as far as interest rates are concerned. But work through that with your loan officer and, find out how that, impacts you directly or indirectly. We're giving lots of quotes to people to give the insight of, hey, how does this affect your ability to make your mortgage payment? What does this do to your budgetary constraints? And as so long as we have that piece of the puzzle accounted for, we're still seeing some of the best rates we've ever seen in our lifetime.
Wow. So like for getting pre-approved or pre-qualified, is that the same process still? Or is there any sort of difference now that we're going through all of this?
Absolutely. It's the same process. We need a short application, wherever you lived, wherever you worked, and then I need to verify your credit, your income, and your assets. That hasn't changed. What has changed is when we were offering these pre-approvals in 24 hours, a lot of banks are saying, hey, we can't even take on new applications. We've actually had to push back to 48 hours now for those pre-approvals. So we're working tirelessly around the clock to help everybody as fast as we can. We just ask for about another day to review your information so we can get those pre-approvals out.
Very quick, Greg, still very quick.
Trying our best.
Absolutely. Well, amazing. I think that, Tucker, are there any really pertinent questions that, some people have asked you to ask Greg as well?
I'm being asked a lot about like what's sort of the short to long-term prognosis for all of this. You kind of touched on that, but what do you think is going to happen in the next 1, 2, 3 years with the sort of mortgage market?
Yeah.
I actually love this question. Most know from talking with me over the last year or two how bullish I was on the real estate market in Los Angeles. I think Los Angeles is a different market than anywhere else in the country. So what I say that pertains to LA is not necessarily how I would apply it to Tupelo, Mississippi, or anywhere else in the country for that matter. It's one of the most desirable places to live on the planet. And there's not enough homes or enough land to let everybody buy and own real estate in LA. So it's first come, first serve. They're putting stadiums in neighboring towns, and the land value is just, it's shooting through the roof, right? The competition to get your offer accepted has never been greater. And that's what I was talking about with this small lull.
Right.
There's 5 million renters right now in LA, and they estimate 2 million of those renters can qualify to buy. There's literally only 200,000 available homes. So if everybody tried to buy a house at one time, we would be short by a 10x. Okay, to me, that's simple economics, supply and demand, and that hasn't changed. It's just the landscape for right now over the next 60 to 90 days with this virus. Everybody's kind of sitting on pause because maybe there's personally some changes that have happened to yourself and you need to take a step back, reevaluate, re-identify your goals, and then put the foot on the accelerator. But everybody's situation's different and we have to be real sensitive to that. But I see us coming through this. I see us recovering by the middle of next year in the stock market. I see us recovering in the real estate world. are not recovering in the real estate world. I see this as being the pinpoint, but we'll look back and we'll go, this is when there was the most opportunity, because I think we're off to the races for the next 5 years.
Great.
Yeah, and just because we are on this COVID-19 talk, I've heard a lot of banks deferring payments. What is your opinion on this? What is your suggestion to do if you are in a pinch, if you aren't able to make your mortgage? What do you suggest?
Great. I'm glad you brought that up. I'm getting a lot of phone calls about that, and it's an ongoing dialogue that needs to be happening. Consult with your loan officer. Make sure you talk with your loan servicing company. Find out exactly what that all means and how it would pertain to you. What are the positive effects of that? What are some of the negative ramifications? But you touched on it yourself, and I think it's really important that we differentiate or discern between the two. A forbearance versus a deferral of payment. A forbearance simply says, hey, listen, during these tough times, we're going to allow you to skip a few payments. And when we get through these tough times, you're going to be responsible for catching up on all those missed payments. A lot of people, what that means is that you're going to go 1, 2, 3 months with no mortgage payment. And then on the 4th month, they're going to call due all 4 payments. That to me is super alarming, and that is exactly what's being misconstrued in the media versus what the banks are telling consumers, right?
Right.
I don't know how that would help anybody, but in 2008, this cost a lot of people a lot of money and good credit, as well as equity in their home. And I wouldn't want you to put yourself in jeopardy of a foreclosure by skipping those payments, not being able to make the demand for the payment come the 4th month, and jeopardizing the equity position that you have in your house. Certainly for people that need it, it's there, it's available to you. I urge you to think about all the options that you have available to yourself, because during these tough times, I think your credit is most important than ever. And there's going to be a lot of opportunity out there, and good credit's going to save you tens of thousands of dollars over the next 12 months. And I want to make sure that there's no negative ramifications to your credit. And I don't know how they're going to report to your credit when you haven't made a payment in 90 days. They've got to tell the credit bureau something.
Yep.
And my experience from 2008 was you showed hardship, you didn't make your payment, and that just sunk your credit score.
Yeah.
I want you to be thinking about that. And I also don't want you to jeopardize $250,000, $300,000 in equity that you might have in your home, so that you don't touch your savings to be able to make the next mortgage payment coming due.
Right, of course. Wonderful. Well, you've answered a lot of our questions, and a lot of our clients have been asking, and friends and family, of course, as well. Thank you so much for taking the time to be on this call. Tucker, is there anything else you want to talk to Greg about?
Thank you again, Greg. We really appreciate you.
Thank you guys so much.
Of course.
Greg is our preferred lender. He's at Cross Country Mortgage. Just direct message us if you want his information. We're going to post it all up here as well. And Greg, thank you again.
I love you guys. You guys are doing a phenomenal job. Keep up the good work.
You too.
I know you guys are finding ways to get it done right now in a difficult time, and we're here to support you in any way that we can. So if there's anything that you need or your clients need special attention, let me know. We'll stop what we're doing to get it accomplished.
Amazing.
Cheers, guys. Thank you so much. Have a wonderful day.
Thanks. Bye.